What's going on, guys? It's your boy E is Profitable. It's been a while since I dropped a video. I've actually been working on a few side projects I have going on. Also, during the month of April, towards the end of April, and now here in May, trading has been a little bit challenging. I think we're stuck in a consolidation, particularly with the S&P 500. And I think it's important for people to understand that these things can happen. Sometimes the market can be stuck in a consolidation that will last a few days, sometimes weeks. And you have to be okay with that. You have to understand that you're not supposed to be trading every single day. And when these things happen, sometimes you just have to kick back and just let the market play its course and then come back later on. I know a lot of people try to trade and force trade every single day. And what happens is when you do that in a market that is challenging, you're actually messing up your psychology. You're actually bringing in doubt into your trading plan, because then you'll start to see that your trading plan doesn't work under those conditions, and then it'll make you doubt everything that you have been working on. So, I highly recommend you to sit back sometimes, look at the market, see where you're at, and if you see that the market is stuck in a consolidation, just step away, don't even trade, because again, forcing trades is only going to lead into you thinking that your trading plan doesn't work. You're going to start doubting yourself. You're going to start feeling fear again, and everything that you've been overcoming over time and all the stuff that you've been working on. It's like now you're taking these steps backwards because you're not understanding the environment that you're trading in. So this video, I'm going to go over a few little tips on things that I do when I'm viewing the market. I hope you guys find value in what I am bringing to you. So let's get straight to it. All right, guys, so this is the S&P 500. We're looking at the daily time frame. And so as you can see, when I trade, I typically like to look for moves like this. You see how the market is moving here. Let me go ahead and get this arrow for you. So you see how the market is bullish, right? So this brings a lot of opportunities for you to get in every time the market retraces. This is nice right here. You see how the market is bearish from here to here. This is bullish. So these are great opportunities to trade, right? And then you have, again, bearish momentum. These are great opportunities to trade. Bullish momentum's great opportunities to trade. But then look what happens here. All right, and this is what I want you guys to take a look at. So as you can see, ever since, let's say, towards the beginning of April, right, we have been stuck in this consolidation. And that's what I'm saying, that you have to recognize this. You have to recognize what is happening here with the market and understand that trading under these conditions can be very challenging. Yes, you can still catch some moves, but for the most part, you have to close those positions every single day. You're not really able to hold anything long term. All right. And because the market is stuck in this consolidation, there can be a lot of fake outs. You can get caught in the back and forth of the market. And this is why I say that sometimes when these scenarios happen, you just need to sit back and just do something else. This is where it's important that you have maybe a side business, or maybe you're going to school, or you have a part-time job on the side, whatever the case may be, a hobby that you can work on, because when these situations happen, it's just not smart for you to be engaging in the market. And this started in the towards the end of March, and we are now in May, and we're still stuck in this consolidation, right? So at this point, we don't know for sure where the market wants to go. It can continue to stay this way all throughout May until finally it either breaks to the upside or the downside. So, now looking at this, guys, just think about anyone out there who is struggling, I want you to think about, what you're dealing with. You're dealing with a market that's consolidating, so if you were trading since April now through May, and you find that you're constantly losing trades, and things are just not clicking for you, right, when they were before, wouldn't that make you start to feel some type of way about your trading? Wouldn't that make you start doubting yourself? Wouldn't that make you start doubting your trading plan? All that. But why? Why are you allowing yourself to feel that way when you know that you have a solid trading plan, that you know that your psychology was on par, right, before this consolidation happened? So this is what I mean when I say sometimes you just need to step back, let the market do whatever it needs to do, get out of that consolidation, and then you get back in. And then you're going to see that your trading plan works, your psychology is good, because you didn't force yourself to trade under these conditions. All right. So with that being said, that was just a little tip for you guys. What I like to do when I'm looking at the market, I know some people like to look a year, two before and all that. You don't really have to do all that. For the most part, you can use this tool right here. It's called date range. There's a price range and date range. You click on date range. I think you can find it here in this tab. I just have it. I put a star to it. So I have this little area here saved with some of the tools that I use the most. So you go to date range, and you're gonna click on today's date, and you're gonna move back 20 bars. 20 bars means 20 days. We're on the daily time frame, right? So within that 20 bar, you want to look for where is buy side. So we know buy side liquidity is here. And where is sell side liquidity? Sell side liquidity is there, right? This is the 20th bar right here, right? So if you want to go ahead and mark that here, right there, and we'll delete this, right? So why do I do that? Well, it's important for you to look at where's liquidity sitting within the last 20-day range, right? And that's really all you need to worry about. You don't need to look beyond that, prior to that, because then you can get confused. You can start looking for things that are not even close to happen. So when you look at the situation here, you can see where buy side liquidity is forming, sell side liquidity is forming as well in the form of a possible double bottom, etc. Again, we're still stuck in consolidation, but again, this is just a good way to kind of visualize where the market could potentially go to. All right. So another thing that you want to do on the daily is you want to start looking for daily fair value gaps. As you can see, this was one, and the market did tap into that daily imbalance or fair value gap, however you want to call it. All right. You also see that up here, there was also a daily fair value gap that the market tapped into. So I always like to mark my daily fair value gaps, again, or imbalances, depends on how you want to call them, because they do work. When the market taps into these areas, for the most part, it does react to it. Like if you notice here was another daily fair value gap or daily imbalance, however you want to call it, and the market, what it do, it tapped into it, and then it expanded from there. You see how it reacted from there. It did come back and break through it later on. It came back into this daily fair value gap, reacted from it. It attacked the buy side that was sitting here, right here, the buy side that was sitting there. It attacked that. All right. Once it attacked that, it came down to attack sell side that was sitting down here, right there, right? But it did not break that daily imbalance, and we see again yet another reaction, right? So when it reacted, it came back to what? The daily fair value gap that was sitting here. And what do we see again? Another reaction. So it's just a way to kind of monitor what the market is doing. But again, guys, don't be too hard on yourselves. We are sitting in a consolidation. There's a lot of things happening in the world, and at any given moment there could be some news, not just with the Fed, with the whole digital thing and Russia and everything that's happening. So right now it is a very very challenging market, guys. So if you're starting to trade right now, just letting you know that you're starting in a moment where it's very difficult. If you have been trading and you had some experience and you were doing good, but now you find yourself struggling, this is the reason why, guys. So don't be too hard on yourselves. Let the market move. Once we see it break to the upside or the downside, then we can kind of gauge where we're at and go from there. All right. So again, guys, I hope this video was insightful. I hope you got something out of it. Very simple video, but again, just giving you guys trying to open your eyes into what we're dealing with so that you're not too hard on yourself, and then use what I'm showing you with the daily imbalance, and to kind of target where the market could potentially go to. Like here, for example, we have another daily imbalance here, right? So if the market decides to attack this 20-day sell side liquidity range, then we could see the market come into this daily imbalance sitting down here. Okay, and I'll go ahead and mark this like this. We could see the market do this and come here. Right from here, we don't know if it can come back up to the top or continue to the bottom side, but you don't really need to know. All you need to know is where is the next area of liquidity, and where is the next area where the market could go to mitigate, or reach to. So hope again that you guys got something out of this video, and I will be dropping more videos here soon. But again, I was just giving myself a little bit of break since we're stuck in this consolidation. All right, guys, thank you for joining. Don't forget to subscribe, and we'll get back to it later.